Good morning and welcome back to another pipeline trading video. Now, today's session, this one's a little different because if you came in thinking, all right, market's bullish, we're gapping up, everything's going up, yeah, you might want to rethink that thesis. What we're seeing right now is not a clear trend. It's a split. And you can see it if you're looking here at these charts. Let me get rid of this. We're chopping sideways. And if you're not paying attention to that, you're going to be long the wrong names while the right ones are running without you. So that's what I'm going to go into today, give you a big scope of the market. Now, starting with the big picture, if you're looking at the S&P and the NASDAQ, it's basically sitting there like I could go higher, but I'm not fully convinced yet. We're holding near highs, slight movement, nothing aggressive either way, right? Not up or down, no panic, no breakdown. It's just pure hesitation. And honestly, the market looks like just opened a brokerage account, saw oil prices and said, yeah, let's not do anything crazy today. That's what I'm seeing. We have a gap up, we're going down. We don't know where the market's heading. And these levels are levels that you got to be very careful. You don't want to jump in on one big thesis and bank on it, right? So don't do anything crazy today. I'm going to go into the first driver of what's going on in the market, and that's our friend oil. Oil's pushing higher. And if you've been watching my videos, I've been saying that the charts are saying that oil looks like it's going to go high. Do I think oil is going to plummet below 100 or 80, 90? Yes, I do. I do think that we've seen this before, by the way. I'm not claiming to be a genius here to predict the future. This has happened time and time again in the past. So when we're looking at the charts, and I was just messing around last night on this because this is what I love about what I do. If I were to pull an extension, you could see how low oil went. We were negative. Okay. So I'm not pulling the fib all the way down there because, that was a black swan event. And I'll leave it at that. But if I were to pull a fib extension from where we retraced and got back to about 17 a barrel, went up, and this is its first wave I'm looking at, right? So I always like to see patterns, and not that you have, Elliott wave's always changing. Wyckoff I like because of distribution and phases in the market on the emotional psychology. But when I was just pulling this, if this is a wave one, let me just draw this in just so you could see it. We have a wave 1, 2, 3, 4. Now, this could be 5. What's interesting about this play is everyone right now that I'm seeing what the analysts are saying, nothing to worry about. This is all going to get sorted out and oil is going to plummet. You have the UAE leaving OPEC. They're going to start pumping. Everyone's pumping, prices will go down, and a lot of people think it's going to go down sooner than later because midterms and Trump and all of that jazz, which it could happen. But what I'm seeing is we might get one leg up higher before that happens. And that's all I'm trying to warn is to be cautious of that. Because if I go to this fib extension, you could see we hit 121.94 a barrel. That was a 1.618 fib level on the extension. Okay. This is saying the next level that we can hit if things go is between 165.34 and 205. So when you hear analysts and people say oil could go over 200 a barrel, they're not telling you what they're looking at, but this is it. If we look at these levels, we can, and listen, wave 5 could literally be a double top. That's part of it. It could be, one where this order block is 122 to 129. That's a possibility, right? Now, what I also want to bring up is, yeah, I think we saw in the futures market, oil jumped over 112 a barrel, right? And then it pulled back. So a lot of people are saying, okay, we pulled back here, went up, never made a new high, made a new low. Now, what we're going to be watching for on the daily is, do we make a new high? If we don't make a new high here and we stay below this area and don't break above, then there's a chance that the rally's done, right? Because you're seeing the moving averages, start to curl. When they start curling like this, you know that things are getting exhausted. And you're not really seeing a crazy amount of volume. And that's, I mean, I guess you could say a good thing too. So we're going to see. Just keep an eye on that. See if we make a new high. If we don't, then the chances of oil coming lower are there. But if you remember, when I made my oil call, it was around this zone because I said if we break the 50, oil's going to go down to, I think I said like close to 70, 75 a barrel or something like that. I don't remember. But I just knew that if it breaks the 50 and we curl, it's going to go for a ride down. And that's where I think oil prices will go eventually, right? You're going to see it go down to about 95 area once we break this level, because this could also be a head and shoulder, right? Let me draw this in. I'm just doing it fast to give you an idea, right? So you always want to draw all these things, see what you're seeing in the patterns. And then what I do is I always, if I'm trading it, I'm trading the 1 minute chart, but I'm looking at the 5 and 15. So here you go. Perfect example of where I said that oil can go and why. And we have a measured move here. So this could actually be um, a double top, right? Or close to it. It doesn't, when you're doing a head and shoulder, it doesn't need to be perfect. You can even draw it up here if you want. It doesn't matter. At the end of the day, you could still see the left shoulder, the head, and the right shoulder, period. So looking at this, what you would want to see is if we do come back down around, this is showing close to, honestly, what I would just do to make life simple, we complicate things enough. I would just put a line there. It's a great line, 85.93. Okay, that's a great level. If we were to break that level and hold that as resistance, then that would be your confirmation. You'd want to see a lower low. So you'd want to see eventually us to go below this wick, which is 79.45. And then you know it's going to be coming down to this area of liquidity, which would be, call it below $70 a barrel, or at least to the 200, which is 74.49. And then if you're going to trade that right now, watch for the first red candle. If we print this red candle today, chances are that the next few days we're going down. So keep an eye out for that. But on the weekly chart, you know, we could get one really big spike up. So, like I said, nothing is 100%. Pay attention. Don't jump to conclusions. Wait and see, because again, this is based off of news, right? If something comes out tomorrow, things will change. And that's where you don't want to be on the wrong side. And you're seeing the greed going up, right? Which we saw here, and it pulled back. So the reason on the weekly, it looks like we can get another leg up, maybe just this week. It might be one big spike. Who knows? Is because it's news driven. That's it. It's that simple. Okay. So let's hope it goes down, because I would love for it to go down. Now, let's get into what's actually moving the overall market. And that's because earnings are coming in strong, but the reactions are completely different. If you remember what I was saying last week with Tesla, let's go first to bat is Alphabet. This one is it shows up, drops incredible earnings. Okay, let me go back to my chart. So I'm just going to give you a little glimpse. Like if you're looking at earnings, they reported 2.82 and they reported almost double 5.11 in earnings. But here's the thing, their revenue was 109, 113. So their earnings went up, but their revenue is actually lower than their last report, right? But the reason I'm bringing this up is this is a company that does well. The stock actually rewards it because if you were thinking of last week, you had Tesla that did certain things and it got penalized, right? There were companies that had good earnings and then it got smacked, right? What this tells you is the market still willing to pay if the growth is clean, efficient, and profitable. Same story with Amazon and Qualcomm. Strong results, AI exposure, real demand, and they're really holding strength. That's not random. That's where money is flowing. Now let's talk about the other side, and up to bat would be Meta. Look at that nastiness. And it's funny because I was actually making this video earlier and I had some things that I had to do that were more of a priority, or else I would have had this out prior. Because Meta, their earnings came out. Not bad, actually pretty solid, and the stock drops hard. Why? Because of spending. Massive AI capex. It's the same thing I said with Tesla. And the market right now is basically saying, yeah, we like AI, just not when you spend like there's no budget, right? Same situation with Microsoft. Strong company, strong results, stock still under pressure. Why? Spending. So we have a trend reversal. Let's see where it's going to hold. Um, you might see us come back down to test this area, right near the 500s or maybe right here. And it could be a consolidation before making its next leg up. And, that could happen, right? We could get another run up here if we break above this channel, right? And a descending wedge, it's not really a wedge, but a descending channel usually leads to upside. Remember, I said bear? Unless this is a complete rollover and the thing's coming, this could go down in this area. It could stay in this for as long as it wants, right? And then exactly when it does break out, this is usually positive to the upside. We just don't know. And we're also seeing, if you look here, head, shoulder, right? Another thing to keep out for. So once you get familiar with seeing these patterns, like it'll just come to you naturally where you see things that you never saw before the more you do it, right? And what was there? Yeah, so the big thing that I wanted to go into was you got a very good shift, like a clear shift in the market. The market is no longer um, blindly rewarding AI. It's rewarding efficient AI, profitable growth, discipline, execution, and it's pushing everything else. Um, so when you zoom out, here's the truth: the market isn't breaking, right? A lot of people are saying this is going to be the biggest crash right now, and listen, it might come later because there's a massive cycle in real estate and everything else that will happen, right? We haven't seen this for a while. And, Choosing winners and exposing everything else is what's happening, plain and simple. So now let's talk execution, because this is where you actually make money, or like I like to say, donate it. Let's start with the number one trade, and that would be Alphabet, right? And if you're looking at these guys, this is your leader. Strong earnings, clean reaction, momentum is there. But here's the key: you don't want to chase it on the open. So if we're looking at this, if you remember, I was saying a tap and go, right? But this is already looking pretty ugly because we broke VWAP. So if we reclaim it, then we could get a move up um, to about 377 or higher, right? But you want to see it. The fact that we broke VWAP, that's not good. So think of it like an A, B, C, or it could be an A, B, C down, right? You have to watch that and see what it does around this support level, because this is looking, because it broke VWAP, that there's a very good chance that we're going to be coming back down to fill this gap at some point. So you don't ever want to chase it. If it pulls back and it holds, and if I go to the 1 minute and I'm looking at this, let's see if we reclaim VWAP, right? Right now it's holding the 10-day, which is positive. That's what you want to see on the 1 minute chart. So I'm showing you guys how I trade when I'm scalping like this. And this isn't a level I would be doing anything long term. But when I'm trading this, I'm watching the 1 minute. I have my 5 and 15 minute to my right. I have 6 screens. I have other things at the top that I'm watching with the overall market news, see if anything pops out. Typically, I don't really pay attention to the news because the market is going to tell me if there is news. If I see a massive liquidity crunch or anything like that, um, yeah, you know that something's happening, right? And also, I'm watching the volume. Remember, if we're going down and volume, you could see, is going down, that's actually bullish. So we could get a spike up, right? They're not going to. This is what I was saying about momentum, right? So you got to watch the volume, because even if I were to go to Meta, another good example was on the 15 minute I caught. Like, here's a perfect example of what I was talking about. Distribution, right? You got a massive leg down, massive. When price falls, what did I say? Volume should rise, right? If it's truly bearish, the volume should rise. And guess what? Look at that. Look at the amount of volume on this gap down. So that's a very bearish thing. Now, if you go to Google, we're seeing the complete opposite. So remember, let's see if it reclaims VWAP. And if it does, look for a continuation break above, the 377. If it doesn't, that's a different story. Things are getting more exhausted. But right now, it's looking bullish for the most part, even though we broke VWAP. If we get above VWAP and reclaim it, hold it as support, then you have a good chance for momentum, because the volume has decreased and you're seeing it here. If this were to be, so again, I'm going to reiterate the other side: bullish market, price rises, volume rises, right? So the price rise, the volume went up. Even though it was red, the volume went up, right? Price falls, volume fades. What do we see? Price started falling, it's fading. Look here, it's fading. Now we're continuing to go up. So if we reclaim VWAP, there's a good chance for continuation if we break. But this is something to be very, very careful with on, if you're an intraday or not, right? If we break on the 5 minute, then there's a chance that she's going to keep going up. But if I go back to the daily, this is in uncharted territory. So if you're saying, Matt, would I buy this on a long-term account? No, I wouldn't, because you're paying a huge premium. If we pulled back at a certain level and held, that's what I would be looking for, right? You don't want to, you want to look at levels to buy and think outside the box. Okay. So, again, to reiterate this trade, this is the number one trade idea today. If we pull back, reclaim VWAP, which we pulled back and broke VWAP, so that's not good because that could mean if we hold this as resistance, that we're going to come down. And we're looking at a range of 373, 351. That's the range that I would be playing. And this is on the 5-minute chart, but you're looking, look at the extreme greed. Look at the score, 82. It looks overbought. And keep in mind, these are delayed indicators. So that's why you got to watch the price action. If you remember, the 1 minute, what did I say? It looks like it's going to go up because the volume's going down. But we still haven't reclaimed VWAP. This is where watching multiple depends on how you're trading. Like this right here, if this candle prints and we break the 10-day, I'm going to do this today on this session to show you, just so that you could see how I do things and what I look for. And this is not, again, financial advice. Everybody has a different strategy. Everybody has a different personality. Typically, your personality is more or less how you would trade. So, not going to go into mine, but just watch what I'm looking at and see what you see. If you're seeing the same thing that I see, and let's see if it makes sense. And I'll give you a play by play. So we had the gap up, a lot of momentum. We fell back down, we held support. That's good. Volume dropped. But now we're breaking, right? And when you see the red, by the way, that is a fair value gap. That's basically showing the price I'm trying to think of the term that they use, like the equilibrium of the market, what the market's pricing. There are, based off of whatever it is that's out there, I'm not going to go into the technicals of it. That's what the market is at one point saying the fair value of the prices, right? So this is not good. We're on the 1 minute. And let's see how she plays, because if we break the 20, then we know we're coming back down here to the 50 at 362. Typically, in a very bullish momentum move, you don't really break the 10 this quick. We're on a minute chart. Typically, you'd want to hold it, but if the volume continues to go down, what we're most likely going to see is a price get pushed down around the 50, hold, and then try and make its next leg up. That's what I would be looking for, because this whole thing is a fair value gap. Can we come back all the way down here? I'm sure we can, especially with the news and how things are playing out. And we saw that if you looked at yesterday, what I was talking about with Bitcoin and ETH, we broke the 20-day. And I should hold on, let me correct that. We broke the 20-day on the daily on ETH, but we didn't break it on Bitcoin. Bitcoin's actually holding the 20-day moving average right now, 20 EMA. And ETH is holding the 50. But it's in a bearish pattern, right? So that's why you don't want to jump to one conclusion. Let things play out. Right now, volume continues. You can see it's fading out completely. And I'm also watching a level 2, just so you guys can see. I have the order book, so not everybody has this stuff. But just so you can see it, we'll do it today. I thought this would be a good exercise to give you a little idea of my day. So I'm seeing big orders down at 2077. on the buy side. So, oh, sorry, this is the wrong one. I'll take that out. Let me just change this. Remember, I'm trading BM&R2, and that's what I was looking at. I just had to pull another one up. Okay. So let's see what the order book looks like. So you're watching the bid. What is the bid? What are they willing to sell? Right? Sellers keep coming in. And then all of a sudden you might see sell share volume sizes going up. You have a 30, so 370.52 I saw quickly. So you could see that the moment there's some big orders at, we had the 369.70, 74. Now we're trying to push it up to 370, right? We need to get above 371.99. So we're ways away. We're a little ways away. But you can see the bids going up a bit. Not anything crazy on the sell side, but look, selling's starting to push up into the 370s, right, for the orders. So you have market orders, you have limit orders. And yeah, like the momentum is dying on this. That's the issue. On the technicals, it looks good because it's holding the 20, right? Now we're going to see, is it going to break above VWAP and hold? If it breaks above VWAP and it holds, that's good. And so remember these numbers, just so you can see this. You have 369.23, right? Now, if I go to the 5-minute chart, right? This is showing we could come down to 364 for support. And look, you have an A, B rejection at VWAP, which we could come down here, 364, 359. Okay, so that's what I would be worried about because I'm looking at the 1-minute chart, right? On the 1-minute chart, I'm not seeing any orders come in. I'm not seeing anything really massive to get momentum pushing up higher. I would assume based off of that will probably get pushed down lower, reclaim, go back up to VWAP, reclaim it, and then make its next leg up. Because if I was a market maker or an institution, why would I be paying up here? I wouldn't. We already got the gap up. So I would want to get a better price. I would want to basically fade out all the weak hands and then go. So like you could see, we're chopping, we're holding. This is a bullish formation. It's actually good that I'm doing this today. It's working out well. Because what is this? This is a bull flag. That's a bull flag. So if you're wondering, where could we go? If we break out and it's not false, 381, roughly. So let's see. Are we going to get a break to the upside or a break to the downside? Remember, this could fake you out. It could go up here and then people start barreling in. You have to be watching the tape. So the positive thing is look at the volume continue to fade. which means there's not a lot of sellers. So that's really bullish. The question is, are we going to get a push down first and then go try and retest? Or are we going to get a push up? And you could see when you're watching the indicators on a minute chart how frustrating this can be. And this is where people get wrecked. Because I would tell you when I would enter this trade. And if you're wondering why I'm not trading it, I'm already in other positions. So this isn't something that, based off of the price too, and the amount that I have on my buying power, it's the risk reward for what I would be doing. It wouldn't make any sense. But I wanted to show you in real time how frustrating this can be. And if you're not patient, remember, it's like hunting. Some of those guys will sit there for half a day before they get one shot. And what's interesting is that one shot better count, or else you just wasted 9 hours sitting there, sometimes freezing your balls off in wherever season you're in, or sweating, one of the two, to get that one shot and you miss, right? It's the exact same thing. But you have to have the discipline and patience, and you got to leave your emotions at the door. And if you do put your trade on and you can't control your emotions, then maybe automate your system. And what I mean by automate doesn't mean like you have to have AI do it or anything like that. Put your trades in your levels and then walk away or go read a book, sit, monitor, see if there's any adjustments, see if there's news, see what's changed in the company or didn't change in the company. There's so much information that you could be learning about your position that you're doing that there's ways to distract yourself if you're that emotional and you can't sit here and watch this and it's torturing you, because there are people that get tortured watching this. See, now you're seeing orders come in, right? You're seeing volume rise. Let's see. Oh, looks like she wants to break out pretty soon. But remember, this could just be a fade. I don't know about you guys, but I'm jacked. Jacked to the tits. Still doesn't want to reclaim. Is it going to hold the top of the wedge? See, if we break out, it should hold this area as support. The 10 and 20 should start curling up. And if you're saying, why do I have the Gaussian channel? The Gaussian channel is like a magnet. So I always like to just see how far it is from it, because eventually it's going to get pulled to it for support at some point. And when we get really closer into it, sometimes there's a short that I would do. And maybe we'll get that today, and I could show you. But right now, looks like we want to reclaim VWAP. Everything's pointing up. We need to break above this, and notice we made a lower high, but we didn't make a lower low. That's bullish. This also too could be a W, right? So the more you do this, the more tape you watch. It's no different than sports too. Like, look at any pro athlete, they're watching tape. Probably more than they practice, like physically. They're watching more game film. This is no different. If you could replay and watch the tape over and over and see what you did wrong or not, like you could see right there, a lot of buyers just stepped in, right? It was getting pushed down, and we're going, this next area should be 373. Phone's blowing up. 373. Still does not want to reclaim VWAP. So, a lot of people would be really worried that it's not getting above VWAP. But you're going to see here, it keeps getting rejected and volume spikes, it's coming back down here. Remember that. This could go both ways, by the way. Let me duplicate this for you so you can see. Oh, no. I don't want that. Get out of here. Dots. Why is it doing this? There you go. Where'd it go now? That was annoying. There. So, let me give you a play-by-play. You're seeing it literally just teasing people. Remember, I was saying in a few videos back that institutions are not sitting there looking for a way to screw you over and take your stop loss or whatever else people think. They're looking at levels where they're going to find liquidity. But you can see here what makes them really good at what they do. Look at the size of the orders. So you'll notice we just saw one come in at 600 size. It's quite a bit, right? But before that, you saw 100, a lot of 100 bid sizes. Keep an eye on that because that's very telling. They're really good at sizing into a position without anybody being suspicious of it. And then all of a sudden, they accumulate, and then it goes. So this is a really good learning video because you're going to see the order book and watch how these guys play their hand. So you could see the market's still under VWAP, which is bearish. It's not a good sign. And if you remember, when we go to the 5-minute chart, right? I want to reiterate this. If we go to the 5-minute, I said that we could potentially go down to 363, 366, 65, and 361, right? So remember those numbers because what you're going to see is what we get on the 1 minute. And if we break the 20 on the 1 minute, that's the move down. So this is actually not looking bullish at all. Because you would have expected when we stayed above there and touching VWAP, you want to see volume go up. So you can see how it's not black and white. When I say, hey, in a bullish market, prices rise, volume rises, price falls, volume falls. In the bearish side, price falls, volume rises, price rallies, volume falls. And then you're looking at this, you're like, yeah, but it did that. And why we get, no, it's not that simple. And you're seeing like they're still in a range. That's all this is. It's a range. And if you wanted, you can adjust this. Because look, you could go to where it wicked down, make it touch the majority of the candles. So you can see we're still in a range. I don't really have to do that at this stage. I could kind of see exactly where it is just by the price action. I'm drawing the lines in so that you could see it. But I've been doing it long enough where I don't need to draw it in all the time like that. but it's good. It's a good visual to have. And you could see the Gaussian channel keeps creeping up closer. Pay attention to that because it could make its leg down before making its leg up. And this is just a measured move. But this right here is actually a bullish formation. This is a bullish um, flag, right? We have a bear flag and we have the bullish flag. I hope you guys are enjoying this. If you are and you like how I'm doing this breakdown, leave a comment below. Tell me if there's any other companies that you're watching or seeing. Give me your opinions. If there's anything you think that I'm doing wrong, I always like to hear this stuff. And hit the bell notification, subscribe, support the channel if you can. If not, that's fine too, and you just want to watch, whatever. It is what it is. Let's see. So this right here is not looking the greatest because you don't ever want to see it break the 20-day moving average. So if you remember when I said this at the beginning, I said, let's talk risk because every good setup has a trap. So we had the gap up. If it loses VWAP and it can't reclaim it, that's not strength. That's a bull trap. And this is where traders get smoked trying to force this. And at this point, step aside or flip your bias. You know, right now, for me personally, trading this, if it would have went up and everything were to curl up, we got above VWAP, I'd be like, hey, I would go long. The way this is playing out right now, I would be looking for a quick short. Right now, I would be looking at shorting this, and you could clip off maybe a few dollars, $2. And I know you're probably thinking, well, what's $2? Like, who cares about that? Well, if you're trading size, it's a very good day. You only really need to make anywhere from 50 cents to $1 a trade with the proper size or buying power. Let's see. So when you're looking at this, it's actually very simple. More simple than you think. Respect VWAP. Trade the edges, wait for the confirmation, and stop trying to predict what the market should do. Because the market doesn't care what you think at all. So that's the game plan, right? And this is just not for Alphabet. This thing, what I'm telling you right now, you could apply this to any, like right now, any AI stock momentum. Like fade the weakness on Meta. Like Meta would have been the same thing, but it would have been to go short, right? So understand this isn't a bullish market or a bearish market. It's just a selective market. And it's a lot harder for, I would say, the broad majority of investors. If we had stagflation, I think Ray Dalio actually discussed something about that recently. That's not good. It's a lot of chop and uncertainty. So watch. This is looking. This is how frustrating trading can be. Look how long we've been sitting here. Right? We went above at one point, looked like it was going to reclaim VWAP, and it didn't. And we went back down. And if you remember those numbers I was talking about, I hope this happens in real time so I can do it and show you. But we're looking to reclaim, I think it was 366 area, somewhere around here. Okay? Because On the 5-minute, that was roughly the 10-day moving average support. But this has a lot of momentum. That's the thing where you just got to be patient. Uh, Google's cutting edge. They're in quantum computing, uh, AI. They're in everything. So they're not going anywhere anytime soon. And a lot of people with earnings like that and a report like that, they're going to jump to companies like this for certainty and comfort. And it could be longer, longer time frame traders. But for me, this is not really what you'd want to see on a gap and go. Not yet, at least. There you go. We want to see volume really pick up here. And it's good because now you could see how greedy we were on the score, and you're seeing the MAC, which again, yes, they're lagging, but you could see that the momentum's starting to shift. Are we going to get a push higher? And basically, keep in mind why I'm saying this too in real time. There are people, traders, or the algos, or anything like that, that could be programmed to be when we break the 20, go short. That's it. Because if you break the 20, which is a huge support, this is a huge support number, the 20 EMA or SMA, whatever you're using, you typically are going to go down to the 50-day EMA. And that's what I would be betting on, is once we broke the 20, that's not good. And look, now you're holding the 10 and the 20 as resistance. 50 is going to be what's coming in based off of this candle right here. We take this out, it's gone. And you're seeing it. Now, remember the number I told you guys. I believe it was 366. Go to the 5-minute. Sorry, 360. What is it? 367.74. And then 363. So that's the range right here. 367, 363. Now the question is that a fake out? See how we're holding the line? We broke it, but we still have not made a lower low. Will we make a lower low? This is the question. Because if we break the 50, folks, 358 is next. If we break the 50, the 10 crosses the 20, the price crosses the 50, we hold the 50 as resistance, bam, 200-day moving average is next. And it will happen ferociously because people will panic. People that went long got faked out in this bear trap and bull trap. And like I said, this is a bull flag, but you can't just go 100% off that unless you're a gambler. That's it. You want to do a 50-50 shot, or what you could do is you could do a straddle if you know how to do options, and you could play the spread here, and you can do a measure and move between this area, right? You could buy puts at these levels and a call, and then you can sell it below it, right? Or just in case to hedge. Lots of ways to make money in this market. You just have to have a strategy you're comfortable with and stick to the game plan. That's the hardest thing. Look how long we've been sitting here on this video, just watching this chop on the 1 minute. But this is necessary to do. I made a video of me trading, I think it was BMNR. over a month ago, but that was in real time. So you saw my orders, my execution. I did one in the morning, one in the afternoon. It's just making videos like that could also be very boring for people because I did get some of that where it's like you almost feel like you're rubbing it in, or people are looking saying, "Oh, look, this guy's just showing." He's not showing what he's losing or anything like that. Which I do. There was one video I made where I lost, and then I went back in the afternoon session, and I made all of it back, and I think another $1,200, something like that. Not a huge gain, but I made it all back. But that's the thing. If your head's not in it, step away and leave. And that's where, if you see my day in the middle of the day, I usually do things around the house, spend time with my wife or my child that's still at home, and then 2 o'clock I start getting ready for the end day session. Right? You're going to see volatility. You're going to see what's holding, what's giving up. Is it, typically if we get a far extension from VWAP, you might get a pullback to VWAP towards the end of the day because people don't want to, that are intraday trading or swinging stuff at key levels, they're not going to want to hold it overnight, especially in this environment. And that's why you see the big moves. Now, remember I said we're going to go down and touch the 50-day. The question is, are we going to hold the 50 as support? And this is again where, and I'm guilty of it, I've been faked out too. Are we going to get touch here, everything curls back up and then makes its high? Because that's a possibility too, right? It's not just one way. We can even go back into this. But right now, you could see that we just had a change of character. That's not good. That's bearish. And the reason being is you're not seeing volume pick up. With momentum, volume would pick up, right? But again, you had a massive gap up. That's why it's not so black and white. Just looking at this and saying, okay, gaps up, this is bullish, I'm just going to jump in. And this is going to continue to go higher. No, it doesn't work that way. So right now, what you're seeing is the 10 crossing the 20. That's not good because now we're holding the 10-day moving average as resistance. So pretty soon here, you're going to see, I didn't have the tape up, which you can see the tape. My apologies. You're going to start to see sellers come in on the right-hand side of on this, what am I looking at? On the right-hand side of the order book are the bids for selling. On the left side are the bids for buying. And I said that backwards. I apologize. You have what they're asking for on the right and what they're asking for on the left to buy. One's selling, one's buying. So let's see. Are sellers going to come in? Because, yeah, sellers are starting to pick up. They're lowering their price. If you're selling, you want to see selling. Someone just sold 800 shares. See that? And look at that wick. That was a big. So if you're going from 100 shares to 800 shares, now 1,600 shares, that's a lot of money. So this is telling me that sellers are stepping in at these levels and that we're probably going to have a flush down. And I mean, this could be a gnarly flush. If we break the 50 and we go, this could potentially come down to 358. So let's watch this and see what happens. Now the bids are going up and down. Now we just went up a bit and then went right back down. And they want to go and break 369. That's what I'm seeing in the tape. Boom, you just had it. Now we're at 368.74. So you can see if you're watching the tape and you're looking at the bid, you know where our level is on the screen on the 1 minute. Now we just got to see how the market makers are going to, they're not going to do this in one shot. You're not going to get a big flush until they want to do that. Right now, they have to have the liquidity and the moves for whatever it is that they're going to do with price matching. So you can see there's a spread there by almost 20 cents. So a market maker is filling the gap to balance out that spread, for anybody not understanding that. That's all a market maker's job is, and then they'll collect a few points off of that. And then also, I'm going to cover this because I've heard this before from somebody being a little lippy lips with me. And they're saying you can't watch the order book because they manipulate it and they put limit orders or they do things in there that send a mixed signal to you. Well, if you know what you're doing and you're seeing the levels, isn't that what you want to see? That's the whole point of the order book. If you see things that are coming out of left field, then you know something's off, either to the upside or the downside. So I didn't understand where this person was coming from by saying that. And in the end, I don't know, you didn't really agree or disagree, but that's the whole point of the order book. Let's see. If we break the 50, and you could see how the Gaussian channel was very big in distance from the price. As this continued to rise, it's like I said, a magnet. We come back. Are we going to hold this as support? Or another thing, too, I should do on this, just to give you another good idea on the power of Fibonacci, just so you could see. This is for anybody who thinks trading is gambling, which I'm sure there are people that don't know what they're doing that do it. But you tell me that you can see confluence. So look at the levels I said before I even pulled up the fib level. I said 3 what did I say? 367 and change. Not knowing that 366, and the only reason I said 367 was because of the 5-minute on the 20 EMA, the 10 and the 20. Now pulling this up like 366, 363, 359, and it's almost at the 200-day moving average. That's the power of Fibonacci. Now, if you were going long, you would love a 0.618 to 0.786. 0.88 for the record, most people don't use. I put that in for myself. That's a level where it's really, really oversold, and usually you get a really good bounce off of that. So I've had a lot of success on trading that level, but it's not popular for people. And the 0.786 is actually more popular, but this has also helped me because anywhere in between here is somewhere that I would be looking, if my thesis was to the upside, to buy or add to the position to go long. But you could see we're holding the 50-day, right? You don't, if this is to the upside and we're going to fill some of the gap and then go, you don't want to see a deep pullback. You want to see a shallow one. Typically, it's the 0.382. But just to give you an example, you could have put your trade on here. Look at what you would have made. Right? It's $4. So we held the 50. Now, It might curl and hold this as support and go. Like you could see the confluence. What's interesting is if you drag this down, right? You could see how you could keep changing this. And this is why you never want to really go down that path. I'm just going to get rid of these lines because they're annoying me now. But you could see that the measure and move, the vertical lines that I put in, like we have some order blocks up here that are bearish. So remember, now that we've broken VWAP, there's orders up here. You could see them. If I took the green one away, it would be brown, which is bearish, right? So you're going to have people that have positions. Now, if the market makers or the institutional traders are wanting to go short, they're going to want to get the price up here, not to make a new high, but to fake people out thinking we're going to break before going down. Unless they are actually going to break it and go up, they'll take out those orders, right? So you're not seeing the volume, though, pick up. And the fact that we broke the 20 over here is a really big red flag. But we held the 50. So could we get another leg up? Absolutely. But this is where being patient, even if you're bullish and you want it, you don't even care. Why would you buy it up here? Why not buy it at a better price? Doesn't make any sense to me. So you could see that order block that was put in. This is typically where people right here would have got wrecked because they had a whole bunch of liquidity that people went long on thinking it held the 50. And believe it or not, there are people that invest like that. Where it's like, okay, it's holding the 50, this is going to go up, and that's it. Now, I don't know what their risk management profile is, but this is if you're putting your stop loss here, you could see this even wick down here and then go. I've seen so much of this over the past, but the fact that we broke the 20 and held it as resistance for this long is not bullish in my opinion. We're not having any volume kick in. Sorry again. This keeps coming off because it's not on there. And now we're breaking the 50. So now if you watch the order book, you're going to see are buyers going to step in and at what level are they stepping in? 366, 43 should be a first bounce that you get. So now here you might see it bounce up to try and reclaim the 50. It should hold the 50 as resistance if we're going to continue to go down. Might not even give you that because now we just made a lower low. So you had lower highs, you have a lower low. And like I said, this would have been a good trade if I was trading it today. You would have saw 371. Yeah, you would have saw $4. So, you have 1,000, 2,000 shares. It's a good day. It's a good morning. So, first fib will get hit. To me, it just hit the fib because I didn't draw these in perfectly. I did them fast to show you the confluence, but you could see how it supports this area, right? Now we should see this go back to the 50, right? One nice wick, right? We broke. See where it says change of character? This right here is where you'd want to retest. Now it should be resistance. It used to be support. Then it's resistance, right? It was support over here. We had a change of character here. Broke that, went to here. If keep in mind why this could be a gnarly drop is because it's a gap. We don't have anything in the middle here to look at our next level of support except for the 200-day moving average. And if we break the 200-day moving average, then it's going to continue to go down. There's an order block down here. So I hope this is informative for you so you can see how I do things and why I'm doing them. And again, this is not financial advice. This strategy works for me. It may not work for you. You may be seeing things that I'm not seeing, that you would have had a better entry than me or a better exit than me. There's so many traders that there's guys that are way faster too, right? They're using hotkeys, they're doing things that for me, I would never feel comfortable doing. It's just not my personality. My personality when I'm trading, because I have a family that I'm supporting, I'm very anal with what I get into, at what level, and what my comfort is. Now, when I'm comfortable, I'm okay with risk, probably more so than anyone I know. And it's always worked out well for me. I'm not someone who gets fearful easily. Um, I've seen and been through some things. So, needless to say, I don't get shaken out quickly. So you can see now that we're holding, it really, really likes a 3.82 fib level. But if we break that, 363 is next. Now we're out of the Gaussian channel. So typically what you would see is a bigger retracement. The Gaussian channel is going to turn red. And then either we're going to continue and it's a complete trend shift, or we could go for another spin up, right? Because keep in mind, this is on the 1 minute chart, right? If we go to the 5, what did I say? The first level I said was 367 because of the 10-day moving average. Look at where the fair value gap is, 367. Now it's going to potentially, unless we reclaim that, it's going to potentially go to 364. How will I know that? I'm going to go to the 1 minute chart. And I'm going to watch this. This is what I would be trading, right? I would have my screens. I'm just giving you a quick example of how I do it. I would be trading the 1 minute chart, but I have 6 screens. I have my 5 minute and my 15 minute. I have the market above my head. So imagine 3 screens. I got 2 in front of me vertically. I have 2 to the right of me vertically and 2 to the left vertically. So on the right hand, I have my 5 and 15. I have the S&P and the Q's up live. I got news. I got Bitcoin and ETH on top because I'm trading BM&R. I got my positions. I got my options chains. I got one option chain up. I got another one below it. I got news. I got another chart to my left. And then I got my account, my brokerage on. So on the other 2 screens to my far left, I have 1, 2, 3, 4, 5. I have 6 tabs open that I'm watching. So I'm watching multiple things to come up with this. It's not just one thing, just so you understand that. And you don't need to do that, by the way. For the record, you do not need to do that. When I first started trading, I only started with one screen, then went to two. But I'm doing multiple things. This isn't all that I do. And for me, if there's emails or anything else that I got to do, I just don't want to not be able to see what's going on if an alert comes off. And then usually by anywhere from 11:30, like now even, I would start to potentially look to wind down. If it's going to hold here and we reclaim the 50, I would have just closed the position because it's a bullish momentum. So I would be playing a tight stop here to see if we reclaim the 50, right? And everything starts curling up. We continue to hold, like that last candle we just got, all these buyers stepped in. Remember, I said in a bullish market, you're going to get shallower pullbacks, right? If we don't reclaim the 10-day, we're going to go to the 20. But this is looking like on the higher time frame, right? The 5-minute, it's all curling up. So this is where understanding this, see how it's curling up. If this buyers come in, remember, they want liquidity. They want a better price. A descending triangle is bullish. So you could have traded this to go short. Now you could go long. Remember, I said this before. I'm never married to a position, especially intraday trading. That is not me. That's not what I do. Anywhere where I see there's going to be a shift and I'm looking at the order book to go short or long, there's been days where I must have made, I'm trying to think, at least 30, 40 trades in the day. Just one day though, there was more. I don't do that often, but there's one day particularly I'm thinking about, and it was a huge day for me. But the market was so volatile, and this thing was just chopping, and I could see it because sometimes when you're doing stuff like that, you have to be in sync with the market, because then there's other times where I felt or thought the same thing, and I got wrecked all day. And then after I hit my limit, because I always have a tight limit, I walked away. I ended the whole day. I said, today's not working out. I've made 3 attempts and now I'm chasing. And I knew that my psychology wasn't right because I'm trying to make up for that loss, which was not even a big loss, but it's more of I hate losing. Who wants to lose? Oh, don't be a sore loser. Well, if you're a happy loser, you're a loser. Who wants to be happy about losing? Don't have poor. I always hated that. Don't be a poor sportsman. Well, who would be happy losing? Like, what do you want me to be a happy loser? That doesn't make any sense. So we're gonna see. I mean, this right here is back in the Gaussian channel. That's bullish. Things wanting to curl up. And yeah, if I was an institution and I want to buy this momentum stock, right, based off of their earnings and money's going into the market, I wouldn't want to buy it up here. So let's see. We're above it, we're holding it. But that right there would have been a trade. You could have either did it off of VWAP, the fact that we broke this one candle, that's a Maribozu. You could have put your stop right above it to catch even just this leg. You could have been happy on the day. But you would have been an A rejection here and you would have held it. And then you could have did a trailing stop. You could have moved your target down to your stop over here, 369.70. There's lots of ways to play this. But if I were short over here, I would be letting this run. Even short over here, I'd be letting it run with a stop, right? We broke to 20. If we're going to go back up, I'm out, right? If I started seeing something here with the order book And for anybody sounding like what I'm saying is double talk, where I keep going back and forth, I'm giving you both perspectives on what I'm looking at and why I'm looking at it, where I would put my stop if I'm going to trade this intraday on the 1 minute, and what the levels are. For me, this is bearish. I would be playing this short from the get go the moment we broke VWAP. That's what I told you. But you never want to be the guy who thinks that you know everything on this, and that just because it did what you said it was going to do, that it can't reverse. Because you could very well see it right now. If we get massive orders coming in, right? We're only see now. Look, keep an eye on the size. The size is what's going to tell you what type of money's at hand. If we had a whole bunch of 100 shares, now all of a sudden, boom. Now we have a Maribozu candle to the upside, just like we had a Maribozu candle to the downside. This is going to create a fair value gap. So if we break above this, right? Guess what? It's no longer, I would be out. I would be looking to get out. That's why I said if you got this, you could have made this. It all depends on what your goal is. If you would have risked, so if you would have risked, what is that? Call it 37 cents to get. So look, if you're saying, what am I saying? So 372.68. Put your loss up here, right? Put your stop loss at this level right here. So really you're risking 30 cents. But 372.59, do the math on 367. What's that work out to for your risk reward? It's more than 2 to 1. Could have even done that here too, right? Broke the 20-day, caught this, out. Because this is a bullish stock, right? So you don't want to be married to it going short all day, because typically it's not going to do that. You're going to look for the institutions to get this stock at a better price. If we go to the 5 minute, you'd want to be out. What it just did is very bullish. Remember I said at the beginning A, B, C, or it could be an A, B, C. Well, you're seeing this is going to go up to the upside. Me just looking at this right now, I would be thinking we could get one massive spike if we reclaim VWAP. This is going to go make potentially a new high or maybe a double top. But the fact that we're breaking out of this descending line, yeah, you can see a 380 today. This is just the psychology of the market. We're consolidating. That's bullish. The fact that we're consolidating, this is accumulation in a bull flag. But I hope you're understanding how I could see a bull flag. If I still wanted to go because it's breaking VWAP to go short, I can. But I'm not going to be married to it going down to 363 or 359 and be greedy. It made its pullback. I'm also looking at the company. I'm thinking of other factors here. And we're going to see, right? I would have covered on this candle. And I said, let's look at the 0.382 Fibonacci. If you replay what I said, you want to see a shallower pullback. This is a big level. It's the first level, but there's liquidity here. We're still not reclaiming VWAP. The order book is still not showing us exactly what we want to see. And now what you'd want to see is this hold here to go up. What do you know? We need to hold the 10. Sing a song. We need to hold the 10. Google gobble on us. Orders are picking up. Is it a fake out? I don't know. The Gaussian channel is red. That's bullish. And I know you associate red with being bearish, but typically when we get to the red, that means that it's going to break above the red to go to green eventually. And on a 1 minute chart, it's very different than the longer time frames. So typically these areas of red are going to be shorter unless it's a really big pullback. But now we're making higher highs, and we're going to see if we make a higher, we made a higher low, and we're going to see if it's making a higher high. And then we reclaim VWAP, and we break through. There's a bearish order block. See, this is telling me after we potentially get a run that this level is going to be a big level for it to come back into. And it may not be tomorrow or the next day. It's just those are fair value gaps. It typically will either get filled now or later. And we're getting close to a time where the move is almost going to be intact, because in the middle of the day, there's really not much going on except the move will play out. That's why some people put their trade on, they'll put their stop loss, and then they'll walk away and they'll leave it. They'll put, if you were short here, you could have put your stop at VWAP, right? Trailing stop. Take some off the table, leave a little piece on, and then put your stop at the VWAP, because they know if it breaks and it reclaims it, there's a good chance. Like, look at where all the orders are, just so you could see. They're all above VWAP. Not up here. This line up here is the fair value gap that was created from this morning, because that's where it gapped up. That shade that you're seeing here, these are bearish order blocks. These are a bunch of orders that are there. And it's above VWAP. These are people that went short here. They put a stop loss above VWAP. Now, if the institutions want this thing to go and they like what they saw today, they're going to keep buying it. And what did I say they're good at doing? 100 here, 200 here, 300 here. Oh, I'll take the 400 shares. I'll take 100 here. They just keep buying. That's called accumulation. But they're doing it in a way where it's not creating any attention. Because if it did, it's just going to drive the price up on themselves, which is not what they want to do. If we break above this, this is gone. And another thing too that I've done, if we broke the 20, and I said at the beginning earlier that the next support would be 50, that right there in itself could be your trade. If you're an intraday trader, if that's what you wanted to do, you could have waited for this and put a stop and see if it, or theoretically what you could have done, I should say what you should be doing, if that's how you're going to trade this market, you would buy here, you would have added here, you would have added here, and you would have added here the moment we broke, and then you would have covered it all here. So same thing here. Now that we're going back up and we know how this is playing out, you know that they're starting to reclaim VWAP, you would be looking to add here add here. So remember, I said the moment we had this candle, I would be looking to cover my short. It doesn't mean it can't roll back down. You already made your trade. We already know that this is a momentum stock. This is not, you know, a bait and switch type of stock. You're not really seeing a lot of sellers. Sellers are going up, so you're seeing 200, 100 shares. They moved the price 27 cents in a second on what they were willing to ask for a share. I was gonna say it happened so fast I didn't even get a chance to say 37. So 371.40 was a big number, and it got taken out and it went right back to 371.50. But there's sellers coming in now at 371.36. That right there is not sellers that are doing it. It's this level that we were talking about of liquidity. So it's either they're going to get the liquidity to go down. In my view, I don't think they're going to do that. I think they're going to keep running it because it broke and reclaimed VWAP. Now we broke and reclaimed VWAP. What's going to happen? It's going to pull back. It should hold VWAP as support and then make its leg up higher. But remember, this said it all. And that is why you want to watch the 5 minute and the 15 if you're trading intraday. That's a big candle. So AB, you're going to see it. It's a huge candle. And look, on the higher time frames, what do you see? I said it's going to have a shallower pullback. That's what you want to see in a bullish market. And then on top of that, how did volume react? Notice how, as we kept going lower, what did volume do? Kept going lower. Now we have volume. Look at this one volume candle. That was around VWAP. Volume picked up. So you have a good idea just based off of the volume indicator right there, okay, that we were going to break VWAP. Question is, how high are we going to go now? Are we going to remember now we're in the momentum to the upside? We have to hold above VWAP. So your trade here, you could have traded this candle right here. Me personally, I would have never traded that candle. I would have traded this candle right here. So we broke above. It's a Maribozu. This pulled back and it stayed in the range of the candle. And I would have caught this run. I would actually be lifting some off right now. I would just start taking some off. You're seeing the greed go up. And again, this could be a fake out. That's just because we broke above doesn't mean that we can't come curl back down. Right? Like I said earlier, this is a range. You have to decide on how you want to trade this range. So the fact that we broke out over here is where we broke out of this wedge. This is looking like it might make a new high or it might not. It might be a double top before coming back down. Right? And if you're saying, well, that's not really that big of a run to catch here. Well, yeah, but it gapped up 7%. Think of how big of a company Google is. That's a lot of money. You should be seeing volume here continue. If we do get a big pullback, see how there's no volume? That's not good. I don't like that. I want to see volume really start to pick up. because I'm not seeing the orders picking up in size. You see where it's 100, 100, 100. Now you have 1,000. That means that this could wear out, fake everybody up, thinking that it's going to go to the upside, and then reverse and come right back down to VWAP. And it might not happen right now because it's a change of character that's about to hit. We have to close this candle. Then it typically will go up here, pull back down, and then go. But the change of character, because of the way it is and the indecision right now, you'd have to see how much, like the risk reward here to hold where I said start clipping some off. I would start clipping some off and doing a trailing stop. Depending upon how much you're trading and with what leverage, just to give you an example, on this candle here, that's a 1.5. Well, call it a 1% play. Okay. This right here, where I would have started to trade it, would have been here. This candle here. So on the day, just this one idea would have been a 2% trade. That's just intraday. And that's just a company of this size. That's with no leverage. So if I'm saying 2% with leverage, that's equivalent to a 4 to 6% to 8 in a day. If you did that 10 times in a month, you doubled your money. Just as an example. That's where compounded, and that's if you didn't even pull anything out. If you keep doing that, the actual amount compounded is a lot greater. So we're going to see. We have a change of character. It's holding. Now this should hold the 10 and 20 all the way up. We should not see a cross down. If we see these two cross and invert, okay, that means it's exhausted and it's coming back down, and this is going to wipe out all the longs that are going long here. It's going to take them all out, and it's going to go short down to 363. But so far, the fact that we reclaim this is really bullish. You got to see if this is going to be an A, B, and C up, or is this going to be an A, B, C down? That's always what you want to be thinking in the back of your mind. How is this? How I think of it, you'll laugh. How is this going to betray me? Because that's typically what would happen. Whenever you think you have it or you know it, that's it. If this comes up here, that's a double top. All right, we did make a lower low. We need to make a higher high and then pull back and make another higher high for that to be intact. And here, like just to give you another example, the degrees going up. It could be this one candle right now. How much time do we have? 10 minutes. Within the next 10 minutes, we could see the move, and I would be out gonzo for the day till at least 2 o'clock. And you walk away. If you sit here and you try and force things after that, I can guarantee you're going to lose. You're going to give back on the day. Right? Everything is getting overbought. All the indicators are showing it. That's a huge wick. That is so bullish. But it goes back to what I was saying earlier, right? Yeah. Look at the surprise. 90% surprise. 2%. Okay. But look at what they reported, 109 billion in revenue. Well, they had 113 billion.83 in revenue. Look at what the price of the market was, 345. That was the fair value at that time when they beat that the market put on them. Notice how there's a fair value gap here at 341. So how much higher could it go? I'm sure it could go extremely higher over a longer period of time because I think companies like this are going to continue to have an insane amount of capital that they bring in from AI, considering that they're the infrastructure players behind it. Um, but today, to price it at that, considering what it was priced at the high before we had this pullback, doesn't make much sense to me as a value investor to be buying at these levels on the long term. Trading it, I hope I'm giving you a good idea or an education, a more educational approach on what I do and how I trade it and in real time what I'm looking at. I'm trying to give you the best commentating I can do to give you put words to my thoughts and give you the clarity of what I'm thinking. So when I'm here trading, what I'm telling you is what I'm thinking in my head in real time when I'm executing. So you could see we had a change of character. We broke. We should hold this, right? This was the ceiling here. Now we should be holding this level. And sometimes it does go a bit below to get people, but like this level here, it should be holding. It should not go below VWAP. It should actually, in my opinion, on the 1 minute, I don't want to see it break the 10-day. If we start seeing it break the 10-day moving average, then we know that things are coming to an end, right? You saw it break the 10 and then it went back above the 10 and then again. When it starts to do that, you know that things are getting exhausted. But like this actually today worked out to be an amazing day for this video because you're seeing the measured move play out in real time. 376.86. And I said, I believe it would happen within the next 15 minutes. We have 6 minutes left, right? Because we had 10 minutes when I said that. So you can see within almost 4 minutes, it's going to hit this. It's not going to be exactly the whole time because, again, there's algorithms and things that are programmed. Let's see. Could be this one candle in 10 seconds and then the next candle is a reversal or it keeps going. Could be a day where you see 8, 9, 10%. And I'll tell you, I would have already started trimming my position for the record. Good run. That's a 2% run. So with leverage, you're looking at a 4 to 6 to 8% return on this one little stretch. Not to mention if you're trading options. If you're trading options, so for me, options provide a greater return for the amount of money that I'm putting up. You could do some really big numbers. You know, this right here on an options play, like just to give you an example, I'm going to pull it up. Let's see, just so you can see this. Now, if you do this, by the way, I would advise you to be very careful. Options have a huge amount of risk because when you're wrong, you lose. There's no in the middle. For me, I would have been looking, just as an example, if I was doing this candle, I would be looking at a either 368 or 370 call a month out. So if you're saying why would I put a month out? Because you remember I was talking about risk. So I don't want to be sitting here. You could go 2 weeks out, but I would rather pay more on the premium than I would, um, have not have a peace of mind. So what I mean by that is if I have more time and I know what I'm doing in the sense of I know I'm going to get out. This is just going to be a quick run and I'm out. I'm not holding this to expiration, but if let's just say it chops sideways, right? You don't want to be against the clock because the time decay on that option contract is going to kill you. So look, just as an example, I went out to May 29th. I said the 370 or 368. So you would have paid, okay, so Google stock is 376. So for 100 shares at 376, right? You would have had to have 37,000 to buy 100 shares. That's it. So if the stock went up $1 or $2, you would have made $100 or $200 on 100 shares, right? Now, if you're trading 1,000 shares, I'm sure you know where I'm going with this, at 376, 1,000 shares at 367, you're gonna have to have some really big money. Not everybody has an account of buying power, right? So if you look at the return, I said that was a 2 plus the 1 on the short, you're talking about a 3-4%. If you're leveraged, call it a 6 to 8% ROI on the day, right? If you would have did an option contract with the same numbers I said on where I would be trading, if you paid the higher one, which was a 370, you would have made 162% today with an 80 delta. So that means there's an 80% chance by May 29th that we're going to be closing above 370. So those are trades that's how I would have traded this. And what's interesting is, just to give you an example, that's $8 a contract you're paying. So when you hear people say they made a boatload of money in the market by options, and yes, a lot of people lose. I took a massive loss at the beginning of the year on options, but I've also had days where I batted it out of the park, right? And I wouldn't say to bet your whole portfolio on it or take a huge chunk that's over a percentage of your portfolio. But if you had a $20,000 trade on, like, well, let's just say this. If you had 10,000 divided by 8, that's 1,250 contracts. So each contract, when you would have bought this, was probably, I think it was $6, right? So you would have doubled your money on this one trade on an options play. So keep that in mind. And you could do this with 100 shares. $800, you would have made $800. Or you buy the stock and you would have to put up 37,000 to make 100 or two. You made literally 4 times the amount with 3 times less buying power. That's the power of options. So I hope that makes sense. If you have any questions or anything like that, put it in. See, I would be really, really concerned holding this, but because it's such a big run, I would wait for it to break the 10-day. So I would do a trailing stop on the 10-day moving average and I would walk away because this is showing me that it's most likely going to come back down to fill all this. And we never, if you're saying why, we never even tested VWAP. Typically you break VWAP, retest, and then go, right? We broke VWAP, we retested, it held it as resistance, and then it chopped resistance and it went down. We broke above, never once did we test it. So that's why I would be thinking that. But here, that's the game plan, guys. Follow the strength in Google, respect momentum in AI winners, fade the weakness in the names like Meta. Understand this. This is not bullish. This is not bearish. This is selective. Okay? So if you found this video helpful, please subscribe. I hope it worked out the way it was planned in your mind to learn this. And like I said, leave comments below. I'll try my best to answer questions and continue to make content like this. So again, subscribe, hit the bell notification, stay connected. As always, stay disciplined, trade with intention, and God bless you all.